Is your money actually safe? Not just physically in your wallet, but safe from inflation, manipulation, and system failures? Because today, the way money moves, grows, and disappears is transforming right in front of us. The financial system we trust might not be as secure as it seems. And at the center of this change is one technology quietly rewriting the rules of finance: blockchain. For decades, we've lived in a world where money is controlled by centralized institutions. Banks, payment processors, and governments act as the gatekeepers of our wealth. We deposit, they hold. We transact, they approve. It all runs on trust that the system will protect our money. But what happens when that trust starts to crumble? History gives us enough warnings. Bank collapses, recessions, and inflation have shown that financial systems can fail. The 2008 global financial crisis was a harsh reminder that our so-called secure institutions can break overnight. Millions lost their life savings, not because of bad luck, but because of a broken structure. That crisis exposed one painful truth: control over money means control over people. When that control is in the hands of a few, the balance of power tilts dangerously. So how do we create a world where money is truly ours, transparent, secure, and free from manipulation? That's where blockchain enters. Blockchain isn't just about Bitcoin or cryptocurrency trading. It's a revolutionary way of storing and transferring information. Imagine a massive digital ledger, not held by a single company or government but shared across thousands of computers worldwide. Each transaction is recorded, verified, and added permanently. No one can alter it. No one can erase it. Every action leaves a trace, visible to everyone. This system removes the need for middlemen. No bank verifying your payment. No broker taking commissions. No government freezing accounts. Transactions happen directly, securely, and instantly between people. It's the purest form of digital ownership. That's why blockchain became the foundation of cryptocurrencies like Bitcoin and Ethereum. These digital currencies promised a new kind of financial independence: money controlled by code instead of central banks. People could send funds globally within seconds, for a fraction of the cost, without waiting days for bank transfers or worrying about third-party interference. But it's not just speed or cost. It's about trust. Traditional money depends on intermediaries to prove transactions are real. Blockchain replaces that with math, a decentralized consensus where every computer in the network verifies what is true. It's an open, transparent system that anyone can inspect but no one can corrupt. This idea became powerful enough to challenge the traditional banking model. For some, it offered freedom from hyperinflation and capital restrictions. For others, it was an investment opportunity. And for many, it was a glimpse into what the future of finance could look like: fair, open, and secure. But as the saying goes, every revolution comes with chaos before order. The crypto market has faced its share of storms. After years of hype and explosive growth, the world witnessed a sudden and devastating crypto crash. Billions of dollars in market value vanished within weeks. Coins that once promised unstoppable returns collapsed to near zero. Exchanges froze withdrawals. Investors who believed they had discovered digital gold found themselves holding worthless assets. The crash was brutal, exposing the dark side of rapid innovation, speculation without regulation. This sudden collapse didn't just shake portfolios. It tested the very foundation of blockchain's promise. Critics called it proof that crypto was unstable, while believers argued that the problem wasn't blockchain itself, but greed, scams, and human error built on top of it. And in a way, they were right. Blockchain remained intact, transparent, and functional, but the ecosystem built around it had become infected with shortcuts and false promises. That crash taught the world an important lesson: technology can be perfect, but human behavior rarely is. True financial freedom isn't just about decentralization, it's about responsibility. When you control your own money, you also bear the full weight of your decisions. There's no bank to call when you make a mistake. Lose your private key, and your funds are gone forever. Yet even after the crash, blockchain didn't disappear. It evolved. Developers built stronger systems. New projects emerged, focusing on transparency, security, and real-world use cases. Governments and corporations began studying blockchain for everything from digital identity to logistics to central bank digital currencies, known as CBDCs. DeFi, or decentralized finance, became one of the biggest breakthroughs. It allows people to lend, borrow, and earn interest without involving banks. The rules are written in smart contracts, pieces of code that execute automatically when conditions are met. No paperwork, no middlemen, no discrimination. Then came stablecoins, digital currencies pegged to real-world assets like the US dollar. They were designed to reduce volatility and make crypto more practical for daily transactions. And now, even traditional institutions are exploring blockchain integration, realizing it can make systems faster, safer, and cheaper. So despite the crash, the movement didn't die. In fact, it grew stronger, more mature. Blockchain's story is like the internet's early years, full of failures, bubbles, and corrections, but ultimately transformative. Every major innovation goes through the same cycle: disbelief, chaos, adaptation, then acceptance. Still, we must remember that blockchain is not a magic shield. It doesn't guarantee instant wealth or eliminate all risks. Prices can rise and fall overnight. Scammers can trick the inexperienced. Governments can impose strict regulations. And without knowledge, users can lose everything. The promise of blockchain lies in understanding it, not blindly following trends. Because at its core, blockchain is about empowerment. It gives you control over your assets, data, and decisions. It removes the need to trust a third party by letting you trust the system itself. But with that power comes responsibility to protect your keys, verify information, and think before you invest. So, is your money really safe? The truth is, safety now depends on what you define as control. If your money sits in a traditional bank, it's insured but controlled by someone else. If it lives on a blockchain, it's fully yours, but you're also the one accountable for keeping it safe. In the end, blockchain is reshaping the meaning of money. It is no longer just numbers in a bank account. It is a living digital network built by people for people. It's breaking down financial borders, empowering small businesses, and giving individuals a voice in the global economy. The crash reminded us that innovation without caution can destroy fortunes. But it also reminded us that failure is part of evolution. The same way stock markets have survived recessions, blockchain will survive volatility. It's not about avoiding risk, it's about understanding it. The financial world is changing faster than ever. Every day, more institutions, governments, and investors join the blockchain movement. Whether you're ready or not, the future of money is becoming decentralized, digital, and transparent. So, ask yourself again, is your money really safe? Or is it just being borrowed by a system you don't control? Because the next financial revolution won't ask for permission. It's already here. And those who understand it today will lead the future tomorrow. Blockchain isn't just about technology. It's about freedom, transparency, and control. It's the idea that money should serve people, not the other way around. And as the world learns to balance innovation with responsibility, one truth remains: your financial safety begins with knowledge, not trust.